The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Tuesday morning. We got about 24 minutes to go until the start of trading, and we got markets in negative territory to kick things off, being driven lower by hot CPI data. We'll get into it, though. Pretty transitory numbers when you look at used cars. The common theme in that CPI data moving forward, 1/3 of the impact. So not too dramatic when you take that out, but nonetheless, the market paying attention as we drop about 20 points pretty quickly. In the S&Ps, you drop from 43.77. We're trading right now at 43.63. All things considered, though, folks, when you take a look at the S&P on a daily basis, we're basically ticking at all-time highs right across the board right now. S&P is trading at 43.63. We got the NASDAQ 100, 14,829, folks. Quite a price tag on the tech stocks. We get the Dow backing off a bit, but the Dow's been on quite a trend as well, inching towards the all-time highs at 35,000. We're trading 34,809. You got Boeing back a little bit this morning. That putting a little bit of weight on the Dow, I'm sure. Boeing shares, let's see, down about $5 as Boeing, we'll jump over to that story right away. Why not? You got Boeing shares trading on the fact that they cut the 787 Dreamliner production delivery target after new flaw found. Just a continued supply of not so good headlines out of Boeing. So Boeing a little bit lower. That's going to put an impact into the Dow this morning. But we got prices lower across the board. And we got bank earnings this morning as well. We'll get into those. Let's jump right into it with the CPI data, as I mentioned in the update. So 9.9% in the month of June, month over month, 5.4% from the same month last year. And again, we're going to get some staggering numbers year over year, folks. We know that. Month over month, though, pretty staggering how this continues to run, right? This is the third month that we're dealing with 0.9%. We had 0.7 and 0.6 last month, not yesterday. And then we had 0.9 and 0.8 talking about the core and then the headline number. Now, excluding volatile food and energy, the so-called core number rose 0.9% and a 4.5% increase from June of 2020, the largest advance since November of 1991. Used vehicles, you're going to hear this one often. I'm sure you're going to hear Chairman Powell potentially talk about it as well. Used vehicles accounted for 1/3 of the gain in the CPI last month. Remarkable that used vehicles still just quite a surge in pricing over there in the used vehicle market. The outsized increase in the June CPI was also driven in large part by pricing rebound in categories associated with a broader reopening in the economy, including hotel stays, car rentals, apparel, and airfare. Shouldn't be too surprising there, right? I think there's a lot of ammunition in here for almost anyone that wants it, which is the interesting part of all of this, right? We got hot numbers for sure. The median forecast was only looking for a 0.5% gain in the overall CPI from the prior month and 4.9% year over year. So a beat there, but when you look at the transitory numbers influencing this number, I imagine that's going to give Chairman Powell enough ammunition to stick to his guns in terms of what he is arguing, which is that the impacts of this inflationary data are transitory. And it's a hot number, but it's a hot number driven by certain aspects of that CPI data that point to transitory data, most notably being the used car market contributing 1/3 of the prices of that CPI data. The market, we're down 13 points, folks, but man, you're only back to where we were trading at yesterday morning, right? Not exactly a staggering impact on the markets when we're down 1/3%, and all the markets have seemed to do is go straight upwards in recent past history. Okay, let's jump around to some of the banks because we got bank earnings kicking it off with Goldman and JP Morgan. Pretty strong numbers, both of them down a bit this morning coming into that. Let's see how they're trading before we jump into it. You got Goldman Sachs shares, was down, not so long. We're up now by about $5 on Goldman Sachs on their numbers. JP Morgan, barely in the red by about 19 pennies so far, but was down by about a couple dollars. As I mentioned, pretty strong numbers here. You get into Goldman first. Goldman deal makers bump bumper quarter, so the deal makers bumper quarter, counter slump in trading. They really got a backlog here of deals as well. Revenue from advising on mergers and acquisitions gains 83%. It's been a hot IPO market. Trading slows from a year earlier, the height of the pandemic. I mean, these banks were just crushing it in trading when the markets were going haywire. You got an 83% gain in Goldman from advising on mergers and acquisitions, helped by Goldman's investment banking group post a 36% revenue increase last quarter, more than analysts had predicted. They have a backlog in here. Here we go. I want to get into. So investment banking revenue of $3.61 billion. Market was only looking for $2.92. The second quarter figure includes $159 million from corporate lending. And here we go. The bank said in a statement Tuesday that its backlog, a closely watched indicator of revenues from mergers and acquisitions work yet to be completed, ended the quarter at a record level. I mean, Goldman's got a backlog of mergers and acquisitions that is a record territory. They've never had a backlog that large. Mergers and acquisitions really heating up. Goldman capitalizing on that. Trading revenue, though, expected to decline across Wall Street, unable to match the manic pace of the coronavirus-induced market gyrations of early 2020, as they put it. Goldman, not a bad number, though. Goldman's desk reported $4.9 billion, down from $7.18 billion recorded last year. Fixed income business posted a 45% drop. Fixed income was they were just crushing it in fixed income last year, if you recall. Asset management business, which also includes its growing alternative investing platform, turned in revenue of $5.13 billion, more than double from a year earlier. Alternatives investing platform. The bank has been trying to reduce investments in its own and lean more on fees from picking winning bets for clients. Now check this out. Despite that, its equity investments climbed to $21 billion. They're trying to reduce investments of its own and just capitalize on fees. But meanwhile, they can't do it because the markups on their portfolio are just crushing it. So they have investments to $21 billion, up from $20 billion at the end of last year. And that was driven by higher markups on its portfolio, even as it shed $5.5 billion of its holdings. Net income totaled $5.49 billion, second highest firm-wide quarterly result. Earnings $15.02 a share. Market was looking for $10.14. How about that? Earnings per share $15. Market was looking for $10. My goodness. Company-wide revenue $15.4 billion. Market was looking for $12.4. Staggering beats on that front, right? Goldman Sachs up about $6. You're talking about maybe 1.8% on the top side. Now we get into JP Morgan. Tops estimates as well after posting $2.3 billion benefit on better than expected loan losses. Okay. The firm posted $2.3 billion benefit from releasing $3 billion in loan loss reserves after taking a $734 million in charge-off. So they released kind of some of those funds that they had put aside just for darker times, fearing what may have happened on their loans, and not quite the case. Earnings, $378 versus $321. Revenue, they take in about $1.5 billion more than the market was thinking. We talked about the benefit from releasing that $3 billion in loan loss reserves. Consumer and wholesale balance sheets remain exceptionally strong as the economic outlook continues to improve, Jamie Dimon said in a release. In particular, net charge-offs down 53% were better than expected, reflecting the increasingly healthy condition of our customers and clients. So they kick it off in a big way. Fixed income, $4.1 billion. Market was looking for 4.16, but nonetheless, we got JP Morgan shares trading higher. We'll trade flat right now, 157.86. Stay tuned, folks. Come back with our man Kevin Hinks. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now down about 12 points. We get the NASDAQ 100 negative by 36. Markets catching a little bit of a bounce following the decline to negative prices on that CPI data. We get the Dow negative 55 points. Dow almost back to right where we were. Russell negative by about 15 points right now, down about 0.2%. Jumping back to commodities, we got crude bouncing from the little acceleration to lower prices. We're back above $74 in crude. We get the gold contract back as well. Gold, look at that volatility on gold, right? Trade down to just below 1,800. We're back to 1,807 right now in the price of gold. And we'll jump to notes and bonds. We get the 10-year right now negative by 5 ticks. We're talking about a yield of about 1.37%, the yield on that 10-year. All right, we talked about Goldman. We talked about JP Morgan. Strong numbers for both of them to kick off the bank earnings season. We also get Pepsi numbers. Pepsi putting up some strong numbers as well. We're up about $2 right now, with Pepsi trading at $151.33, up from about $149.51. We'll get into those numbers a little bit later into the program. All right, folks, let's jump over to our man Kevin Hinks. Every trading day, Fast Market by the TD Ameritrade Network, folks, 11 a.m. Eastern Time on Tiger TV. Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network and Fast Market breaking down the market action. We're coming into earnings season. We just talked about the banks. We get more banks coming out this week as we kick things off. We got a CPI data this morning, a little bit hot, but we'll see what Kevin thinks about it. Kevin Hinks, we got inflation or what in this economy, man?
The answer to that is unequivocally yes. But we don't have too much inflation, I think, is what this number is saying, because if you look at the screen on the CPI data, there's one big number that jumps out at you, and that is used cars and trucks. Still, Tommy, up 10.5%. A third of this number is used cars and trucks. So there is inflation. You look at food. Food at home, up 0.8. Food away from home, up 0.7. Energy. Right? You've got commodities up 2.6%, gasoline 2.5%, fuel oil 2.9%. So there is inflation out there, Tommy, except here's the thing. The expectations were for 0.5 and 0.5x food and energy. If you take a third of that away from the used cars and trucks, Now these numbers look much more in line and where consensus was. So no one thinks, even though this is more than a 1 month phenomenon in used cars and trucks, no one expects it to last. So that part of this inflation number is being discounted, and I think that's why you're seeing a very muted response in bonds and yields, Tommy.
Yeah, I like the take, man. I mean, we're down about 11 points in the S&Ps. All things considered, it seems like we make records every single day now, Kevin, in the S&P. So no real pullback there in a substantial level. And as you put it, man, the used car, I had to check my notes. It almost seemed like I was reading the same report as last month, Kevin, talking about CPI data, a third of the impact, almost a double-digit number in cars. And I kind of look at it and I say, well, Chairman Powell has everything, this is my opinion here, has everything he needs to continue his thought process, because it kind of aligns that, yes, it's out there, but it's, in his opinion, something that's going to be transitory, but kind of gives everybody kind of what they want in terms of, you can be on both sides of this number, Kevin, because, of course, you can argue there's inflation because, of course, there's inflation. I mean, it's staggering numbers that we're going to be reading about for decades to come as we study kind of the impacts of what's going on in this economy right now. But yeah, I imagine that, my focus is on how the Fed is going to interpret this going forward, which I think is what the market is trying to focus as well. And I would imagine you're seeing only a 10-point difference, and that's because the market's going to look at this. And Chairman Powell, he's going to have the same answers, in my opinion, that he had last month, because it's almost the same exact data saying this ain't going to continue with used cars. We'll see what happens. But nonetheless, at some point, though, Kevin, used cars have to become not more expensive than the last month, right? Staggering numbers that we're seeing there. But the market digests it nonetheless. Getting into the bank earnings, Kevin, some pretty strong numbers from Goldman and JP Morgan. They're both higher this morning. We got Pepsi higher as well. The banks continue the trend coming down, but pretty strong numbers by these banks to kick things off for Goldman and JP Morgan.
Good numbers in terms of earnings per share, that's for sure, Tommy, but some alarming numbers in earnings. In trading. Big drop in trading. JP Morgan down 30%. Fixed income at JP Morgan down 44%. So here's what I think, Tommy. I think the markets are soft this morning, even though some of the earnings were good and the bond market is still favorable. I think what's going to start creeping into the conversation here, Tommy, is, are we at peak growth? Is this as strong as the economy is going to get? And I think that's what you're seeing creeping into not only the bond market, but why you've got futures down slightly this morning. Obviously, you've got news from Boeing going to keep the Dow down. It's down about $5 or $6 pre-market. More delays with the 787. We'll be hurting that. But all things considered, banks pretty strong here, even though, interest rates, they're not getting as much help from yields as they were, and trading incomes have really come down quarter over quarter, Tommy.
Yeah, and it's interesting. Was it Goldman, I believe, who had the big backlog, right, of mergers and acquisitions, a record backlog in terms of what they have coming up in terms of mergers and acquisitions? It makes sense, all the IPOs we got coming out in the market, but remarkable that they actually have a record backlog in terms of their mergers and acquisitions business as they ramp up forward in that business. So we keep marching forward, Kevin. We got more earnings, of course, coming out this week. The market's going to be digesting that CPI data this morning when we open in about 6 minutes. What are you guys going to be talking about on the program coming up in an hour and a half at 11 o'clock, Kevin?
Day 2 of the financials and banks, Tommy. So we'll be looking at Citigroup and Wells Fargo. And then, like Folio, will do a presentation on Delta Airlines. Always a fun presentation when we talk to Folio about the airline. So, yeah, a bunch more of financials and a little bit of airlines today, Tommy.
The airlines, man, it's all about the financials today. But the airlines, it is interesting, Kevin. I try and wrap my head around just the fundamental nature of, when air travel domestically and maybe internationally for some of these, Delta, United, American, of course, comes back to anything like normal. But quite a pullback we've had in these airlines. I got Delta up right now. We're back to basically where we're trading at back in December. It's July, Kevin. You're talking about 8 months. Not probably what the market was thinking in terms of consolidation there. And we're a solid 20% kind of off the highs there that we've had. The cruise ships all pulling back a little bit, as well as we see that it's not going to be quite as easy as we thought. What do you give us a little teaser maybe just on your opinion on some of these airlines that we look for, just the general shape? Because my head does gymnastics, man, trying to figure out, where does travel go? When does international become anything? And, we don't have have those answers, man. But what do you look at in some of these airlines right now with being 20% off the highs and in like a 7-8 month consolidation?
Yeah, here's what I can tell you, your viewers. In normal, in a normal economy, airlines can be volatile stocks to trade. So the fact that they're volatile in this economy doesn't surprise me at all. And if you're trading or looking at them or investing in them, you should expect a little bit of volatility. So I think what you're seeing is, the TSA numbers are going up at a nice rate, but they're only going up on the weekends, Tommy, which tells everyone that it's leisure travel and not business travel, and still not a lot of international travel. It's starting to seep in, but you need business travel to pick up, and you need these numbers to keep growing for these airlines. So we'll cover them today, see who's doing better within that group, Tommy.
Nice. It'll be interesting to see once the dust settles where the new normal is for business travel and how that hits those airlines. Kevin, man, we look forward to the program as always. You have a great day. We'll be watching at 11 o'clock.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Stay tuned, folks. We'll be right back for the Open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got the markets climbing a bit. We got the S&Ps just read by 7 points, trading at 43.69. NASDAQ getting a little bit of a pop. The NASDAQ 100 barely in the red. We're trading 14,859. We have the Dow barely close to that. I think we got Dow number on the cash made it to 35,000. I think it finished at 34,996 yesterday, and the futures made it up to 34,915 last night. On the futures, I got a high print of 35,000 on the dot, but we're now just negative by about 22 points. As I mentioned, Bitcoin trading with the market a little bit here as we had a pullback on the CPI data. We got Bitcoin down $250 at 32,505. Crude back above $74 at $74.25. We got the gold contract catching a bid. Look at gold accelerating right back to where we were coming into that number. We're now trading at $18.12, up about $6 in the gold contract, and we jumped to notes and bonds on the market open, and we get a full recoil. Forget about that CPI move. We're right now flat, 133.12 on the 10-year, and we'll jump over to the volatility index as this market claws back some of those losses, 1646 as we come into the market open. Let's check out some of the banks that reported this morning. Goldman Sachs up 1.1% this morning. We got JP Morgan down 1.1%, a little bit of a pullback for JP Morgan. On the open, we got Pepsi numbers last night. Pepsi up about 1%, but giving back some of the gains. I'm going to jump over to Pepsi. Man, they had some strong numbers in a big way. Raising the forecast, always what you like to see. Not what have you done for me, what are you going to do for me in the future? As they put it, earnings crush estimates fueled by returning restaurant demand, the big one here. So net sales, again, year over year, not really interesting to me. $19.2 billion, topping expectations, though, of just shy of $18 billion. So that's a big beat. Return of demand for its drinks at restaurants and other food service customers, the big one here. So we talked about $1.72 versus $1.53. They beat on revenue as well. And you get into where they're coming from in terms of the company's North American beverage business reported organic revenue growth of 21%, the highest of all of Pepsi's divisions during the quarter, North America. Volume for its drinks soared 15%, and food service revenue, which includes sales to restaurants, stadiums, and college campuses, doubled during the quarter. A year prior, the division's organic revenue fell 7%. Frito-Lay North America, which includes brands like Doritos and Cheetos, saw organic revenue growth of 6%. Convenience stores and food service channels helped boost sales as consumers became more mobile. The segment has seen strong sales throughout the pandemic. A year earlier, it was still growing at 6%. So look at that, right? You got organic revenue growth of 6%, Frito-Lay North America, and that was growing a year ago. Not many businesses were flourishing a year ago and are still flourishing now, right? There's that cyclical nature of maybe you were benefiting a year ago, but there's a pullback because if you were benefiting a year ago when we were all locked down, thankfully we're not all locked down anymore, at least for the time being. Half kid, but things getting a little bit dicey, especially with cases in Florida and some other states as well. But yeah, their organic revenue. Quaker Foods, surprising here. What's up? People not eating their oatmeal? Folks, oatmeal is one of the healthiest things you can eat for yourself. I actually just like it too much. I eat too much of it, which is why I kind of steer clear of it. It's too delicious, but its volume fell 21%, pushing organic revenue down 14%. Surprised to see that. Quaker Foods North America, but that is kind of exactly one of those instances I was talking about. A year ago, the segment, organic growth 23% as consumers ate more breakfast at home. But guess what? Since then, not so much the case, as Quaker Foods North America, the only division sinking organic revenue down 21%, organic revenue down 14%. And then here's the important part. On the heels of such a strong quarter, the company said it now expects 11% growth in constant currency earnings per share. The forecast implies core earnings per share of $6.20 for 2021, and analysts were only expecting full year growth of 7.2, so they come in at 11%. Strong numbers across the board. Pepsi, look at that, charging higher on the open, up 1.6%. We put this on a 3-year weekly to get the full run. COVID, you dive down to about 130, pretty stable company, right? You're pumping out a dividend quarterly of about $1.24. You're trading right now at 151, up 1.6%. We put it on a daily. Pepsi, a little bit of a run just even recently from 145 back in June all the way back to March. You're trading at 128.32 on Pepsi. And are we put it back? Yeah, that's an all-time high, I believe, on Pepsi. Is it? It sure is. All-time highs for Pepsi on their earnings coming out this morning. All right, what else we jump around to? So Disney. Now, I'm biased, folks. We get some Disney in my newsletter, Rocket Equities and Options. It's been quite a run for them since last Thursday. All right, you pump up higher from 178 to 185. You're up about 4.5% yesterday. And what this had to do with, which is interesting in terms of if it could be a game changer, and it looks like it could be a one-off, all right? I'm trying to remain unbiased, even though I have some Disney. We have some Disney in my newsletter. I'm a big Disney bull, been a big Disney bull for a while, all right? We've been in quite a consolidation here. You could say back from December, you got up to a price point of about 180. You chop around for a while, even when you pulled back to this area since May 12th, okay? But really remarkable that you trade from 170 up to 183. Now you check out this 170 area. It was nice to see that bounce because that's kind of the 382 area. It's the area we had some support back in January. It's the area we had support back in May. We pull back to that area, and within 3 days, you go from 170 to 183. This morning, you're back a bit. But what was so cool is that, so they had Black Widow out this weekend, big box office Marvel film, took in $80 million domestically, took in $78 million internationally. So we'll almost say $80 million domestically and $80 million internationally. We'll just round up for simple numbers. And then what they did, though, is they took in $60 million for streaming. Now, the coolest part about it is that now I'm a Disney Plus subscriber. So you have to be a subscriber first to the Disney Plus service to be able to have the right to pay $30 to watch that movie at home. And they got 2 million households while this movie is out playing in theaters to sign up for $30 a pop. Now, if you got a family, you got kids, right? You got a mom and a dad at home, maybe. You got 2 kids. Maybe you just got 1 kid. If you have 2 adults and 1 child, folks, that's $30 in ticket prices alone, let alone what you're going to spend on popcorn and drinks. It still seems like a hefty price tag, $30 to watch a movie at home, when that same movie is probably going to be available within X period of months, right, on Disney Plus. I imagine at some point they're going to be bringing all these movies for free to that service. I don't have an immediate need to watch it. We did not watch it this weekend, my household. But remarkable when you look at that, they have 3 avenues now. It used to be domestic and international box office. And now this is the first time that Disney's chose to release these numbers. So they're cherry picking a bit. All right, but you got $60 million in an opening weekend at the same time as you have domestic box offices open. COVID's going on. It could totally be a one-off event. Disney is still going to be releasing some of their films just to box offices first. I imagine they saw the potential here for people who wanted to be in theaters. There was going to be enough demand for both sides of it, but they were right. And strong numbers, $60 million for streaming, $30 a pop at the same time as you're taking in $80 million in the box offices. I don't know how you compete as a movie theater, folks. AMC down another 6% today. I have to chuckle because, folks, we're back to where we were on June 2nd. You're up to 72. We're back to 40. This thing could be back to $15 before you know it, because that is not good news for AMC, that you got companies like Disney, and there's not a lot of companies like Disney, all right? There's not a lot of movies like the Marvel brand that have the ability to do that, but nonetheless, it's a big deal. It's the first time it's ever happened when you think about it, that they've pushed out a film to box offices domestically, done well at $80 million, internationally, $80 million, and then streaming on top of it, $60 million for a total take, about $218 million on the weekend. So Disney trading higher yesterday, giving back some of those gains this morning, down about 0.8%. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by just 5 points right now, trading at 43.71. We got the NASDAQ 100 negative by just 2 points right now. You did just have the Dow in the positive for a moment during that break. We're pulling back a bit. The Dow cash, we're talking about a price point right now of $34,978. S&Ps 43.80 on the cash. We got a NASDAQ trading at 14,719, and the Russell cash actually in the positive right now. I have by about 2 points. Is that correct? Yeah, Russell positive by 2 points. Yeah, trading at 22.81, although we got futures trading down a bit off 17 points right now. It looks like as this market gyrates, and just like that, we got tech stocks back in the green. Let's jump around to some of those FANG stocks, see how they're trading. We got Amazon shares basically flat, slightly in the green this morning, up a point. We got Microsoft shares up 0.6%. Look at that charge higher by Microsoft, up almost $2 from where we were pre-market. Apple shares just the same as Microsoft, up about 0.5%. Apple opened at an all-time high yesterday at 146.32. We're trading at 145.15. Facebook shares down about 0.8%. Netflix shares flat as well at 537.47. We talked about Boeing. So Boeing pulling back yet again, not the headlines you want to see on Boeing. Boeing, so Kevin talked about, they're going to be talking about some airlines on Fast Market coming up at 11 o'clock today. And Boeing's another one. You know, you catch this Boeing one right, there's some room here to the upside. Boeing's trading at $230. I chuckle because, folks, we're back to where we were over a year ago in Boeing. Remarkable, right? Now, this could be an uptrend channel. I was playing with some of those channel lines today. Where we fall, let's just even put this on a 5-year daily. I'm going to get the full COVID collapse to see where we are. Now, you know, realistically, where does this lower trend line start? Do you line it up here, right? That could be the line right here. If that's the case, Boeing could drop down to 204 potentially where we are. We get the top trend channel line matching the highs from June of last year to the high we had in March of this year. The upper trend channel, we're talking about $300, but down about 3.3% today in Boeing. And Boeing cuts the 787 Dreamliner production delivery target after a new flaw has been found. They already paused delivery of its 787 Dreamliners as the FAA evaluates how the company inspects the planes. Further delivery delays would deprive Boeing of cash, since most of its aircraft's price is paid when they're handed over to customers. Can't blame the customer there. I ain't paying for no plane. If you're telling me it's got flaws and you can't even sell it to me yet, I'll give you the money when you give me the plane. FAA said the issue poses no immediate threat to flight safety, is the quote there, but nonetheless, it's just constant. So the CEO said at an investor conference last month that the company would deliver the lion's share of the roughly 100 Dreamliners in its inventory this year. Boeing said Tuesday it will deliver fewer than half of the Dreamliners it has already produced, but has not yet delivered to customers. So a setback yet again. Boeing's down 3% plus today. The issue was discovered as part of the ongoing system-wide inspection of Boeing's 787 shimming process required by the FAA. Although the issue poses no immediate threat to flight safety, Boeing has committed to fix these airplanes before resuming delivery. Let's see. So they said that it would reduce production to fewer than the current rate of 5 planes a month for a few weeks, but declined to say by how much. They're going to reassign staff on the production line to inspect planes and make any necessary repairs. Not a small deal here. Based on the data, the FAA will determine whether similar modifications should be made on the 787s already in commercial service. I hope so, as a consumer. Boeing also said Tuesday it delivered 45 planes last month, 33 of them 737 MAXs. In the first half of the year, the company handed over 156 planes, one fewer than its total for all of 2020. Well, yeah, they weren't pumping out a lot of planes in 2020 for a variety of reasons in Boeing's case. Net orders for the month totaled 146 planes, while gross orders were 219, with the highest in 2 years. Those include an order for 200 MAXs to United Airlines, which the company announced last month, along with an order for 70 Airbuses. United. I was talking to my dad about this. United, they got plans for the future, folks. United. You're trading at 1877. You're basically back to where we were. Oh, that's Under Armour. I knew we weren't quite there. UAL is their symbol. Yeah, I was saying United back to pre-COVID? No. We're trading at $49. You fell out of bed from about $80 or $90 to start last year. You made it up to as high as about 63. I mean, talk about just shaving $14 off there, a 20% haircut. But United, probably the time to be preparing for the future, folks, because America's not the only country that's going to want to travel. International, it's going to happen as well. Internationally, they're behind the curve because of the vaccines and because of the spreading Delta variant. But nonetheless, we will get back to a normal society where travel is okay on an international basis. We're not there quite yet. When we get there, where does United and the airlines sit? That's why I asked Kevin Hinks about his just analysis in this industry, and he said it. Volatility, even in normal markets. You're in this market, you don't know where travel is going to sit. But I would like to see, if I was going to be in an airline, them investing in capital right now, because I imagine the next 10, 15 years, folks, it's going to persist. You know, people are not going to forget sitting at home for a year, year and a half, and not being able to travel. There is going to be quite the impetus to get out and travel, and United up in their ante with 270 plus planes. Boeing's going to be around as well, folks. The world has a duopoly on producing planes. It's Boeing and it's Airbus, and Airbus is not an American company, so the U.S. government is not going to let Boeing falter, rightfully so. We need, for our own safety, security, well-being, the United States needs their own company that produces airplanes, and they're not going to let it falter, and Boeing sitting at 231. I imagine that eventually works its way back up to 250, maybe 300. But again, we see continued delays. Boeing this morning down about 3% on that news so far. All right, what else we got going on in terms of stocks making moves? We talked about the banks. We talked about Pepsi. Conagra out with their numbers as well. They beat by 2 cents a share, 54 cents a share. Revenue topped as well. They cut its fiscal 2022 full-year forecast, though, due to the impact of inflation. Uh-oh. I imagine that is going to be a constant theme this earnings season, folks. Watch out. If you start having people cutting in terms of, what was the exact term? The full year forecast. Not sure if that's talking about revenue or earnings. Nonetheless, they're talking about inflation. Conagra down about 4.3%. That's a big move for this company. You don't get a ton of volatility, right? You go back to a year. Let's back it up even a full year. COVID, yeah, you got down to 22. But right away, you were back to about 32, and we've chopped around between about 34 and 39. We're going to be pushing the lower boundaries of that in Conagra, as they're going to be dealing with some inflationary pressures over the next year, is how they put it. And look at this NASDAQ 100, up 0.2%. We charge higher. We almost get it all back from that CPI print. We're trading at 14,899, 15,000 on the horizon. We get the Dow down about 19 points, and that's with Boeing. lagging on the Dow as well in terms of Boeing down 3% plus. If that wasn't the case, you'd have the Dow in the positive right now. We got the Russell down about 18 points, down 0.8%. Checking back to notes and bonds because it was a quick recoil in a big way. Looks like the market might have thought that CPI mattered, and then not so much. We get it right back. We're sitting at 1.35%. You had the yields spike up to approaching almost 1.4%, but then the market saw those used car prices and said, you know what? It might be transitory. We're going to pull it right back. 1.35% right now on the 10-year. And as this market claws back some of those losses, we get the S&Ps negative by only 3. Let's see how we're trading on the VIX right now. The VIX Volatility Index trading at 1622. We might get a 15 handle. Stay tuned, folks. We're going to be coming back, and when we do, we're going to be talking to my man, Basil Chapman. He is going to be having a full-day webinar tomorrow, folks, right on the front page of TFNN. We'll be talking about it. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The running joke is if you're not buying the dips in this market, you're not doing it correctly. And today's another one of those days, folks. The S&P's clawing almost it all back. We're negative by just 2 points right now, trading at 43.74. We were as low at about 9 a.m., 43.56. We plunge about 20 points lower. We get it all back. We get the tech stocks in the positive as well, 14,900. Dow barely in the red, but as I said, Boeing putting some weight to the negative prices on the Dow, and the Russell negative as well by about 0.9% in the Russell, down 20 20 points. As I mentioned, folks, you head on over to the front page of TFNN. Our man Basil Chapman, he's up live after me every trading day with the Tiger Technicians Hour. He's coming up live next. I encourage you to check him out, folks. An outstanding multi-day webinar. He'll be in there tomorrow, 9 till 4:30. He'll be in there 2 weeks from tomorrow as well for a 2-hour session. Folks, an outstanding value. It's $295, but automatically you get a month of Basil's newsletter, The Opening Call, which retails for $149. So you're basically paying $150 for 2 days, 9 hours of education. It's fully archived. You have instant access to Basil via email during those 2 weeks to talk about whatever he's doing. If you're a current Opening Call subscriber, I really encourage you to sign up because you're already paying for the Opening Call. You're going to get a month free applied to your subscription. So you're really paying about $150 for this 9-hour session with Basil, a full day webinar tomorrow from 9 till 4:30, a 2-hour follow-up session in 2 weeks. All right, Basil does an outstanding program. He's an outstanding educator. If you click on the link on the front page, you can see exactly what he's going to be talking about, the technical tools that give buy and sell signals, how to use them to initiate and keep you in a trade. The techniques will be discussed and practiced in detail. Money management, when to start, when to add, when to peel off. Questions will be answered immediately. And then in the intervening weeks, any questions you have will be answered with a chart demonstrating the technique in question. And then you got the extra session in 2 weeks. It gives you the time to practice and find out what's working, what still needs further studying. Make it second session. You're going to get an emailed booklet when you sign up. $295, folks. You get a month of his newsletter, $149 right there. Encourage you to check it out on the front page of TFNN. Basil will be rocking that tomorrow from 9 till 4:30 with subscribers. And he's coming up next, folks. And we got peaks all over the place. We might get a peak in the S&P to a new all-time high. We can get a peak in the NASDAQ to an all-time high. We can get a peak in the Dow today. Thanks so much for tuning in, starting your day with me, folks. Stay tuned. We got Basil. He's coming up next.